Well, no, I just said we should wear suits and ties from now on. It was 1st of January 2024 or 5.
We don't do that
but
yet
no.
in this. So at least the people I know, they still wear the hoodies.
Every time I hear suits and ties, I think dystopia.
The shirt is tucked in. Yeah, still, just in case. Yeah.
Happy New Year, guys, and welcome back to Huddle Up. This is the first episode of the year, not the first of the season, though.
New year.
But I have a question. Have you done your taxes?
Speaking of taxes, my friend, I will be doing my taxes because we have time until I think March in our jurisdiction. We have time. So you have 3 months time to report your taxes about the previous year. So I think I'm on the clear. I've talked to my lawyer.
Oh,
Yeah, I have many lawyers. I have many money.
okay.
Much money.
Well, it's important that we talk about this because, the CARF reporting and everything that implies, the DAC8 or DAC8 or whatever it's pronounced in Europe. It's the taxman is coming for all of us, whether you're in DeFi, in crypto, in prediction markets, and whatever. You have to be prepared. So without further ado, we have two people joining us today in the podcast.
Yes.
We have Florian Wimmer from Blockpit, which they specialize on providing, tax solutions to crypto users, as well as Sergio Hamza from CoinCub, which is based in Ireland, and it's one of the leading on-chain and off-chain analysis platform on crypto. We know that because we both work with CoinCub, and
We actually do, guys. We actually do.
without further ado, let's invite Sergio and Florian to the call.
All right, let's get into it.
Hello, and welcome to another episode of Huddle Up. Today we have two very important guests. We have Florian Wimmer from Blockpit joining us today, where he'll be talking with us about everything tax-related, basically. We have all heard everything that CARF implies, and we also have Sergio Hamza from CoinCub joining us today, and potentially give more details where needed on the new report that CoinCub and Blockpit have made together, which is the Global Crypto Tax Report. So without further ado, I want to hear from you guys. So firstly, Florian, thank you for being here. And I see a lot of people, be scared a little bit about everything that CARF, for example, implies. And how do we go about alleviating people's fears that it's not the end of the world? I mean, I know that it's becoming a compliant world, and we have to be very rigorous on how we approach crypto from now on. But talk to us.
Definitely, yeah. Well, hi guys, and thanks for having me. Great to be here. I think you don't have to be scared of CARF unless you're a tax fraudster and doing it on purpose. But I think most people don't do that. It's just a necessary step, I think, in terms of bringing certain trust to the sector. And obviously you cannot leave up a hole for tax evasion, which crypto so far has been. If you wanted to use it, the authorities didn't really have the data, the know-how, and they're now trying to close this gap, as would be done everywhere in every technology that you can imagine, where there would be an option to bypass laws. And ultimately, it's not immediately affecting you as a crypto investor, right? So the first, basically, stakeholder that's affected are the crypto asset service providers. They probably should be scared if they are not ready yet, because the implementation started with the beginning of this year in most countries. But you, as a crypto investor, you probably won't get many touch points, at least in the next 1 or 2 years, before actually all the reporting has happened.
All right, so I'm a guy. I'm like, I know Dren. Dren likes taxes. I mean, in terms of compliance and everything, he's more of a compliant guy. I like compliance as well. I know that crypto cannot continue to be this wild west in terms of taxes and everything else. But do you think that there could be another approach to taxes as compared to what it is right now in Europe and in the US and everywhere in the world? Because I know we have to report everything, but could it be done in a more private manner in terms of like let's respect privacy a bit, or do you think this is the best way we can do at the moment?
I'm pretty sure if we put our heads together, we'll come up with a solution that's better. But the issue is we are already so deep into the rabbit hole and everything that's happened over the last years and how the system works that currently I can't think of a better way to do it as it is now. You have the regulated institutions; they need to do KYC. It's less of a tax topic; it's more of an anti-money laundering topic, and they need this data to basically, if you are frauding, you need to be able to be tracked down. If it's anonymized and you are breaking the law, then it's hard to track you down. That's the whole purpose behind that. So I think that the taxation system in most countries, it is broken. We have a spending problem of governments and less of like an income problem, raising taxes on everything. But this would need a complete overhaul. And sadly, it's just not realistic to have this like on a global scale, or at least on a European scale. It's just a country-specific national topic, and it likely always will be, because taxes are just so different, and this makes it hard to change things, sadly.
Yeah, and I think like what Atis and like his people like him are scared about is the fact that maybe it sounds like, for example, maybe just a little bit dystopian in the sense that, for example, if the tax authority wants to have access to our, for example, bank transactions, they have to go through this procedure where they ask for the bank to give the details. At least that's how it works, for example, in our country. But like, if I'm not mistaken, in some of the countries with CARF, all of your transactions, they immediately go to the tax authority, and they will be able to see every single transaction. And for example, the likes of us that use crypto on a daily basis, we transfer some money in this wallet, transfer in that wallet, make a transaction, do this and do that. When these tax authorities get that data, chances are that they might misinterpret that data a bit, and they think that we might be, for example, gaining, for example, crypto or income in a sense, when in fact we're mainly, for example, just paying or getting, for example, an unlock of, I don't know. But I think you get what I'm trying to say. Like, that's the biggest concern, I think.
I think in most countries, or many countries, at least in Europe, you already have this for normal bank transactions as well. It's CRS reporting. It's the common reporting standard, which basically now CARF is for crypto. You have it for traditional fiat value, but it's only certain limits, right? The transaction of 50,000 euros that's coming in or out, it's going to be reported to the financial authorities. And as CARF is now designed, it's on an annual basis, right? So they don't report your data immediately, but it's aggregated reporting in the new year for the previous year. And as you said correctly, there are some countries that go a little bit further. They say that we don't want the aggregated reporting, we want every single transaction. And obviously the exchanges can only report the transactions that they have, which in many cases for a crypto trader that's active, it's just like part of the truth, right? You have other exchanges, you have maybe DeFi activity, and so it's not a picture that's 100% clear in many cases, which could lead to misunderstandings. But ultimately, what the authorities are after is finding suspicious activity, right? So it's not like they get your data and they say, you owe us money. It's more like they get the data, they say, well, this might not fit to what we've heard from your tax declaration. Could you please explain? And then ultimately it's your responsibility to lay open and make sense of the picture of what you've been doing in crypto, and that somehow has to fit the data that they got. So you still have a chance, right, to explain yourself, having this whole picture, which on the other hand, we know it's not too easy to do that if you are active on many, many different platforms, exchanges, blockchains, and so on. But if you don't have the data, they don't have it either. So I think we are going to see a lot of basically letters going out. So they're getting the data. It's incomplete for most people, but it's the first step for them to follow up and demand explanation. And then likely it's going to be a top-down approach of who has the highest transaction volumes, who has the highest portfolios, because that's potentially the biggest tax revenue. So I don't think everybody's going to get a letter, but it's going to be step-by-step going top-down, starting with the biggest whales. They get their hand on the data.
Yeah, so you mentioned DeFi. So how does DeFi play a role into this? Like, how do they target DeFi, and how do authorities in most of the countries, like the biggest ones, how will they be able to track down and get them to comply with current jurisdictions? Because I don't know how that works in terms of being decentralized as a platform. I mean, they were not designed to do this, right? So how will they do this?
No, the opposite, right? It's the exact opposite. There is nobody you can ask for data. But on the other hand, blockchain is a transparent ledger, right? So at least most blockchains are. So they can read the data already if they know how and have the tools, and most of them do, right? There's AML tracking tools. There's also now text tracking tools. But they don't know who's behind the wallet. And this is not a gap that they are trying to close, because with CARF, you also need to report transactions that are outgoing or incoming, right? Crypto deposits, crypto withdrawals, and you have the transfer funds regulation now that's active for a while now, where you probably have seen that if you're using a crypto exchange, if you deposit, withdraw, they're asking, is this your own wallet? Is it the wallet of another exchange? So they have a kind of indication, is that your DeFi activity? Is it somehow linked? Obviously, if you're only in DeFi, it still will be close to impossible to identify what you've been doing. But at some point, you need to get funds into DeFi to be able to work in DeFi. And I would say 99% of that is purchased on a centralized exchange. So this is now the missing puzzle piece a little bit of connecting DeFi activity to the KYC data that you are providing on an exchange. And then obviously it's their capabilities of reading blockchain data. I think if you're active on Ethereum, Bitcoin, and so on, they have the tools to do that. If it's super new, complex systems, protocols, smart contracts, and so on, they're also probably gonna hit the ceiling quite soon on what they're able to interpret. And then again, they come to you, ask you, hey, what did you do here? Please explain. And if you have an explanation that makes sense, then I guess you're done in most cases.
Yeah, now I want to talk about safety and privacy specifically, because I've seen, like, for example, let's say France, right? There's a major conference that usually takes place in France. They canceled it this year because it's only been a month and several kidnappings have occurred, just because the blockchains are transparent, right? And people, like criminals and everything, they were able to track down who had this amount of money on their wallet. So they were kidnapping those people and trying to, like, getting ransom, trying to get the money, doing this and that. So, I mean, that's why I'm quite concerned about this whole thing, because I know the authorities are supposed to be the good guys, but what if there's this one guy in there that has access to that data, and we all know that, you can't control everyone that has a position of power. What if they use that for, like they sell that data, they do this, they do that? Like, how scary is that for the normal user?
I mean, it's definitely an attack vector. I mean, we have that already in traditional finance, but it's not that easy to transfer money away, right? Nobody can hold a gun to your head and say, like, transfer this money to my wallet. The bank will probably call you if you transfer funds and they want it approved, and then the guy has to basically convince the bank that this is a legal transfer. We have those security measures in place, but on the other hand, you don't have sovereignty over your funds, right? Because if the bank goes bankrupt and so on, we've seen that, Wirecard, etc., your money is gone. And that's like the balance that we have in traditional finance compared to crypto and finance. Obviously, there are a lot of securities in place. We know that we work with authorities. Personalized data it's never leaving there, and if it's really hard to do. I'm not sure if it's the same in every country, and probably there are some countries where corruption may be higher and stuff like this. But ultimately, it's probably one of the more secure things. And then there's the second part of your own responsibility, because if people go flaunting their crypto wealth on social media and all that stuff, right? Then you shouldn't be surprised that you might become a target. And that's what's still happening with most of those cases. It's some influencers, it's somebody who really like publicly flaunts that they have made a lot of money in crypto. I think if you also care about your privacy and you try to be quite, as I would say, like the compliance is not the part that's gonna blow you up, right? It's like the chance that some government leaks your data to a criminal organization and they're gonna come after you, I would say is pretty low compared to you fucking up and telling too much in public and then becoming a target.
Yeah, so now speaking of the user perspective, I have this feeling that especially, in this year, since it's just the beginning of this reporting framework, I have a feeling that people will have a tendency to make more mistakes, more honest mistakes, or like deliberately avoid in the first years, for example. And so do you expect that as well? And do you think that is it more dangerous if the data is missing or if the data is incorrect, for example?
I would say incorrect is obviously more dangerous because then there is an issue somewhere, and then it's hard to explain, right? I've already gotten a lot of emails from different services that I have an account with that now informed me with the 1st of January that they start reporting my data due to CARF to the authorities. So a lot of education and is going to be necessary, but people are gonna make mistakes in terms of like maybe they're selling crypto that has been a profit, they owe taxes and they don't declare them. It's an honest mistake. People are just not educated in crypto taxation, right? It's not something that we learn in school. And this also means that for your first encounter, you probably are not gonna get fined or anything, right? It's more like, hey, you have crypto, we know that now because we got the data from the exchanges. Please declare your taxes and do that once, and then everything is fine. It's getting complicated if you're doing it on purpose, right? Tax fraud on purpose, then potentially even jail time in many countries. And I don't think that people are going to make mistakes like that without doing it on purpose, right? In terms of mistakes on the exchange side, that they report wrong data of yours, then it's their responsibility, right? So they are liable if they report wrong data. You are liable for your own tax declaration. So if you have DeFi, other exchanges and so on, putting that whole picture together, declaring your taxes correctly, that's your responsibility. And if there's a mistake in there, then on the one hand, they have to prove it, right? Because they would have to have better data than you. And you're still going to have the possibility to explain. And if it's not on purpose, then well, you have to pay maybe more taxes, but at least you're not going to get fined or any other jail time related sentences or anything like that.
Yeah, we don't get taught about taxes at all or how to file taxes in any of.
Might be on purpose, right?
So, yeah, taxes, all in all, taxes, crypto taxes, normal taxes, you have to do them, right, at the end of the year. But what's one thing that, because I know many people that have joined crypto since they were like 17 or 18, and when they worked in the traditional world, let's say Web2 jobs, they didn't really have to deal with taxes because their job did that for them, right? But crypto, on the other hand, like DeFi and everything, you can't ask Uniswap to declare your taxes. So what do you think will be the biggest issue for these users that are like 20 years old, that aren't really familiar with these taxes? I'm talking about crypto taxes specifically. Like, what will they have? What challenge will they probably encounter during this process?
So I think the first challenge is being aware that they have to do the taxes themselves, right? There is no information. Like the government doesn't inform you that, hey, for crypto you have to do it yourself. Obviously, crypto is here because it's a topic of the sovereignty and third parties and middlemen. We want them gone, right? But then it's our responsibility to do everything ourselves again. So that's the kind of trade-off. Being aware is the first issue, and I guess now with CARF that people are gonna get aware because potentially they're gonna get a letter, right? Won't happen this year, but will probably happen towards like the end of next year or 2028, when the data is actually with the authorities, because that's gonna take a time. And then the next step is gonna be getting your history together, right? Like getting your documentation ready. Like what have you been doing for the last years? You probably don't remember. Maybe you don't have access anymore to platforms, wallets, and so on. So once you are aware that you have to pay taxes, then calculating what you owe and declaring those, start with getting your complete documentation together. And that's the biggest challenge, not just for the 20-year-olds, but for everybody in the space, because it's still so new. It's new technology. Every blockchain is a different programming language. Every exchange has different exports, connection interfaces, and so on. So that's the biggest challenge. It's gonna be like that because we're never gonna get a standard globally for transaction data on crypto exchanges. That's not gonna happen. But there are tools out there, right, that help you with that, but they also struggle to keep up to date. The good thing is the authorities don't have better tools than you have access to. And that's obviously, it's important that it's balanced, that you have the same opportunities to correctly declare your taxes as they have to potentially prove you wrong. And then declare them, right? And potentially save. So the third step and challenge is then how do you minimize your taxes? But to be able to do that, you first need to have an overview of everything that you've been doing.
Yeah, so one question as a user right now, I'm a bit scared. Do I have to go, like, for example, let's say Kosovo, my country, we implement CARF and everything and we become compliant as a country. Do I have to go like 5 years back from now to check what transactions I did in all of my wallets that could be connected to my name on a centralized exchange and then report them all together?
You should.
No way.
Actually, you should, because you might have to be liable to pay taxes in the past years, right? The exchanges are not going to report the data, though. Not initially, not under CARF. Under CARF, they're only going to report everything that's going to happen now since the 1st of January this year. But if the authorities then get your 2026 data and they say, well, this guy's interesting, he's doing a lot of stuff, right? They can go back to the exchange and demand the history of the last 10 years, right? So those subpoenas, they already happen with larger exchanges where data is requested from users, and they get the data because there's going to be court orders behind that. So it could be that they unravel what you did in the past. So yes, you should do it to be on the very safe side. But then again, it's if you are certain that you didn't made any profits that are tax relevant in the past and stuff like this, then you might just not do it and hope for the best. But ultimately, to be able to sleep well, I would try to get everything in order.
I see. Okay.
Now, I mean, enough questions regarding the user perspective. Now, on the business perspective. So I can't help but think that even CARF and Decade and like with Mika last year as well, everything, for companies is becoming more expensive. This core infrastructure comes with a lot more costs in order to be compliant. And do you think that this is maybe favoring big guys like Coinbase and Binance and other exchanges like that? But for example, let's say I want to have a startup, is it over for me? I mean,
yeah, 100%. It is favoring the big guys. It's been the same in traditional finance. Like you want to found a bank, good luck, right? Like it's probably cheaper and more efficient if you buy a bank that's existing already. So if you want to build a financial service provider in the crypto space as a startup right now, you need a lot of funding. And I think the window of opportunity is a little bit over. The market is going to consolidate. It's really hard to compete with Coinbase. I mean, in terms of security, fees, marketing, and all that stuff, you would probably need to have some genius idea of a feature or something that they didn't think of, and then they might buy you. So I think coming from nowhere and starting now a fully regulated business in the crypto sector, it's going to be super hot. I'd rather try to build something in completely decentralized manner. I think there's still a lot of opportunities for innovation. But this Web 2.5, right? So the mixture a little bit of centralized finance, decentralized finance, all of those big exchanges, they're now starting to offer stocks, right? That's a new hype. It's merging, and I think the only players that are now going to challenge those are the traditional banks that are now going into crypto, and they have the licenses, they have the compliance set up. They just now need the tech, basically, and the products. It had to come. There was a window of opportunity to do a crypto exchange. I think it was somewhere between 2012 and 2020. And since then, it's just like as a young startup, almost impossible to do. That's the trade-off. But there are always other opportunities to build a great company in the financial industry as well. I don't know. I wouldn't know what I want to do, but I think compliance, for example, right? We're doing a compliance company. I think our time to shine will come now, but obviously, yeah, it might hinder innovation, right? If you block startups with too much regulation, then innovation is hindered, and the bigger parties, they consolidate, and then they do things like they do. It's a big ship. It's a concern, right? It's like not much room for innovation anymore, but at some point in time, there's going to come somebody up with a new idea. He's going to get financing. He's going to grow big and change everything.
And now, talking about privacy and VPNs, for example, I personally use VPN every day. It's just like a habit, because in the internet, I feel safer. And I know a lot of countries, for example, that have banned crypto. People were still using crypto and making transactions using VPN. So then those countries banned VPNs. So like you can't do anything in those countries, or you get jail time. So should we expect a similar way, for example, for DeFi products? For example, if I have a DeFi product, should I just expect that only people that have VPNs will be able to use my DeFi product in Europe, for example, because it's difficult for the tax authority to get data from the DeFi product that I have? And if so, does that mean that we should expect a wave of VPN bans as we do, for example, in other countries?
I mean, if it's truly decentralized, that should be impossible. What you can do is force Uniswap, right, to block their website for anyone who accesses via VPN. But that's only an interface how you control the smart contract. It's just nice to use for the end user. You still can use Uniswap and everything behind it via other means. So there's always going to be some point of access where you can access those things. If you want to regulate the user themselves and say, like, VPNs are forbidden, if you use them, you go to jail, that's a dystopia, right? I mean, that's crazy. That's like pure dictatorship. So I think and I hope it's not going to come to this. And the beauty of decentralized finance is that there is some way to access this, because you can only censor the centralized counterparties. And they, hopefully, if it's really decentralized, don't have enough might to change anything on the smart contract or protocol level. It's only the interfaces that they provide.
Now I want to go back to the startup part, because Jean mentioned startups and you mentioned financial companies that are Web 2.5. But let's say hypothetically I'm starting a company tomorrow and I'm going to be doing, I don't know, people reading books in my app, right? Like it's an iOS app or a mobile app. But it's going to be fully on blockchain, despite being my app, right? So it's technically decentralized. And I'm going to have my own token. I'm going to be enabling transactions within the app, between people. So does that fall under this tax framework, if you understand my whole situation?
Sure. I mean, if you get your app into the iOS store, then you're already not decentralized anymore.
Okay.
And if you iOS will probably block everything with their own token. They only allow payments via the Apple Store. It's super strict if you to get an app listed on the Apple Store. So whatever you have in the App Store, it's some kind of centralized wrapper to use the decentralized protocol that you behind it. So they can control that. And you would theoretically, if you have users on there, the obligation to verify them and report the data. So Uniswap is a great example. They're not on the App Store, but they are a website, and there's a team behind them. There's a foundation behind them. And CARF says Uniswap has a report. Now, Uniswap, they don't have your personalized data, right? They don't do KYC, AML checks, all that stuff. But theoretically, they would now see Uniswap as a reportable entity. We're going to see how that ends up. I don't think we'll get there. Uniswap will just leave, the foundation will leave the country that might be subject to CARF and go into some other country that's not subject to CARF and host everything there. Because if I have to do KYC on Uniswap, I'm not going to use it anymore, honestly speaking, right? That's the whole purpose behind it. So it's a little bit of a gray zone on how those DeFi interface providers fall into CARF. The regulator says yes, everybody else says no. We'll see once it gets taken to court and the next instance of court, and maybe in 10 years we're going to have a edict on those things.
Yeah, I've seen some companies, do KYC gamified. So if you complete your KYC, you get some points and stuff. But now that I think about it, they're only making you liable to pay taxes by using them. So, I mean,
they don't make you liable to pay taxes, right? Your local government says you have to pay taxes. They just report your transaction data so that the government can enforce the taxes. It's not the exchanges that make you liable for taxes. You would still have to pay taxes. You just don't do it if the government doesn't have your data to control you, right?
Yeah, I stand corrected. Now, like going a little bit on the report, the global tax report. First of all, I want to talk about the US. So the US is also one of the countries that has rolled out its own framework and has pushed CARF to 2029. And does this like 4-year gap create some sort of a data sharing lag maybe that some investors might exploit, or is the IRS simply like prioritizing to enforce domestically first? And so what's going on there? I mean,
so you want to take that one, or should I give my take on it?
Well, I mean, obviously the US tends to do whatever US wants. Like they don't easily fall in line with whatever everybody else does. But I think the second part of your answer is correct. They do focus a lot on American businesses. From the outside and not knowing very much about the ins of the industry from, as we see it from Europe, it seems that they still see America as the most important part of crypto, which they're not far off, and also probably they want to structure their own internal reporting in a way so to get their heads around it before expanding and having to deal with all these other countries. And it's basically just doing your laundry in public right now for most countries, trying to label transactions in different ways, try to transfer this into a centralized exchange. And we're just basically just sitting and thinking which government is going to start filling up the news with sending false positives, or there's a lot of room for error from CARF, right? So Americans playing a little bit closer to the chest, saying, okay, we're going to implement this internally. It's going to be built on our own infrastructure. It's not a massive inter-country organization where we need to adapt to everybody or all the other players. We're just doing this first. But just pushing it down the line, it doesn't restrict it anyway. With the example from Atis earlier on, like, does it feel that you need to start thinking as each of your transaction from now on and from the past as being chased by very negative regulator or tax enforcer? Yes, you should. Doesn't matter really where you are. You should think about it as you should think about, I need to be extremely transparent and I need to justify myself regardless of where I am, even if it's 2027 or it's a 2026 type of situation or 29. This is very much a change of mindset that even companies struggle with. High net individuals need to go on a scale to adopt, and then individuals they need to learn this very fast. If not, you're going to learn the hard way. So again, US is doing US things, but it's not that timeline. It's a little bit confusing for most people. I think this is a future me problem when in fact is most of the world is kind of in a very, very tight together right now. Did I miss anything,
the US,
Florian?
I think it's not going to have that much effect if it's now later than the other reporting countries, because the US was always special, right? If you wanted to register on an exchange, you couldn't register as a US citizen. You had to register on the US exchange, right? There was Binance and Binance US. Coinbase US, and so on, Bybit US. So it really is, everything is already concentrated. All the US investors already are registered on the US entities, which have to report under the local framework anyway. So there's little profiles of US taxpayers on global exchanges that are not registered in the US already. So once that gap closes, with US also now tending to CARF in a few years, I think it's only going to be like 5 to 10% of the US population that that not already has some kind of connection to a reporting entity in the US as of now. So that is why I don't think it makes too much of a data gap for the US to wait 2 years to report under CARF.
Now, since we're talking about the US and the US being special, personally, I think that the US is doing this specifically because they want to test this whole framework out in other countries and see how that goes while they're testing it internally as well, as you mentioned, domestically, and then take like the big step and implement it full on, right? But I don't know how much that makes sense when I tell that to you guys who are much more informed in this specific area of crypto and everything. So I want to ask both you, Florian, and Sergio, and even Dren, what's your opinion on this one? Because this is my conspiracy theory for today. The US is pushing it out so that it can test it out in other countries and then see where it goes from there.
I mean, it's always easier to enforce in your own country, right? So the U.S. Jurisdiction Court can enforce U.S. Players. So the global thing is going to target U.S. investors that are not trading on the U.S. exchange, but only on external ones, which is probably a minority. So it just makes sense, I think, also from their internal resources to focus on those first. So testing it in their own waters before rolling it out is the right thing. Also because it's just like more efficient for them what they can get for the invested resources. That's what I think.
Yeah, and I agree. But now, like, moving to the other side of the world. Let's take the UAE, for example, which has a 0% regime. And a lot of people have asked, so what are the implications there? Since you don't pay taxes, for example, there, but there's still, the CARF is being implemented there as well. So does it mean that their information will just be shared to other CARF countries, or is it just enforced so that they can prevent, for example, any suspicious activity? Since it's not, they don't gain, for example, taxes.
They still gain data, right? So for them it's about data. And who says that the UAE won't introduce crypto taxes in 3 years, 5 years down the road? And then it might be interesting for them as well, like just the data as of now, even if they can't enforce taxes on it. So I think tax fraud is the main reason why CARF has been established, but ultimately it is a data aggregation and information exchange between authorities. So why wouldn't they want to have the data if they have the chance to get it as well?
And what if, for example, let's say the UAE keeps the 0%, but I am a crypto nomad who lives in Dubai, operates there, legally, but like I want to go back to my home country for a bit. And does the 0% rate in the UAE become a liability for me rather than a benefit if I try to move funds back to my home country that has, for example, let's say a high tax rate?
I mean, if you change tax jurisdiction from some country like the UAE to a country, in most jurisdictions it is like as like an acquisition of the assets at that point where you change the jurisdiction, right? And at that point, you don't have any gains or losses. It's just like, what is let's say you have 1 Bitcoin and you are in Dubai, and then you move back to like say Germany, right? Then that 1 Bitcoin at the current rate is going to be purchased. And once you're back in Germany and then you incur any profits or losses on that and you sell it, then you would pay the difference in profit tax. So I'm not sure if there's any jurisdiction out there that would actually want you to pay taxes if you go into the jurisdiction for anything that you held in another jurisdiction before that. It's mostly like that you get taxed in the jurisdiction that you are leaving at the point where you're leaving. So if you go from Germany to the UAE, at the point where you leave, it's a realization of gains, right? So at that point, if you have standing profits, even if you don't sell, they would count it as sold from a tax perspective, and then you start at zero again in the new jurisdiction. Since the UAE doesn't have taxes, leaving the UAE wouldn't incur any taxes, so I think that wouldn't be a problem.
Yeah, and since we're talking about zero tax, I want to get both your opinion and Sergio's opinion on what countries, because you said like UAE might probably, if no one knows if they're going to increase taxes in the next few years. So what countries that currently have 0% tax do you think will be the first ones to implement taxes in the following years? Because the landscape is changing a lot, in my opinion. I mean, there's quite a lot of things happening in crypto right now as an industry. and I mean taxes should follow, right? Just logically thinking.
I mean, there are not as many jurisdictions left where you have actually zero, right? It's mostly like the island states or something. There is a lot of jurisdictions that have possibility to go to zero with long-term holding. Germany, for example, has super high tax rates, 45% if you sell below a year of time frame. If you hold for more than 1 year, it's zero. Portugal, great example. They had zero for a long time, and now a few years they introduced 27%. But also with the same rule as Germany. So if you hold it for more than 1 year, you're still at zero. But if you're doing it speculatively, then it's going to be 27%. And I think we're going to see something like that because crypto, it is an investment asset, right? In most cases, let's not talk about meme coins and all this stuff. And that should be rewarded. You want your population to invest into the future, to save money, and so on. But then again, you also want, if people are speculating, for them to pay taxes on it. So that system, I think, could be something that we see. Most jurisdictions that apply the existing tax laws to crypto. If there's no specific crypto tax law that's getting passed in most jurisdictions. So as this is, it will probably be applied to crypto. That's what I see. There's still a lot of jurisdictions, they don't have clear tax regulation on crypto yet. It could be a little bit like precious metals or stocks or property and so on. And we're going to see more clear definition of where crypto falls. But I don't think we're going to see a lot of changes in law actually for crypto. That might come later, but first we need some kind of definition that I think we're going to see in many countries in the years to come. But Sergio, I think you have a more overview of all the different countries to your part of the study, right?
I mean, it's for me, it's a little bit like game theory, because once this data becomes available, and we discussed this in the past, Florian, it will be a moment of realization. How much tax should I be able to extract or profit from the crypto transactions in my country as a government becomes a very good question once that number becomes big enough. And this is the fundamental difference between countries that give this long-term advantages, that have thought through what type of behaviors we want to stimulate and to reward, and what we want to penalize. We want to penalize some of those things that are very risky, that are actually not good for you. So it's basically your government putting, your tax stamp on alcohol and cigarettes and increasing that each year just because they believe they're not good for you fundamentally. But what you're raising there, Florian, is true. Is once governments start thinking about this, because most countries didn't do or provide a clear classification of what is what. This field is very much evolving. There's a big chunk of the world that doesn't have not put enough energy into this, because crypto was a very small asset class, and Bitcoin was quite a very, very, very tiny piece of the pie. Once that becomes interesting, there's a lot of simulation. So one country will do something, another one will do something else, and there might be changes, but it will come once the data becomes available. They're probably waiting, all of them, on each other to see which one will move first, which one will do what. Every time one country makes a move, it raises a lot of eyebrows. There's a lot of potential risk for any country to make a move, especially with taxation. So they will wait a little bit. They will see probably what other people are doing, what's the best practices, and then they will start making changes. But we're talking, a 5-year horizon here. I don't see something sooner.
But what you said, it's a good point, because the government doesn't know how many of their population have crypto at the moment. There is no reliable numbers for this. I mean, some exchanges publish their registered user numbers and KYC user numbers, but that's overall, and it's not per country. And even that would not really imply a number. It's super hard to get something on like how many people in that country are holding crypto. With the CARF data, there will be a first really good indication. So the jurisdictions will know how big is the pie, right? Like just take an average income of somebody, how much they invest, how many people do have in the population, and they can somehow estimate the potential tax revenue. Currently, nobody has that at all, right? Maybe Austria is the first country that has it, because you have to have withholding taxes on the larger crypto exchanges in the country. But everywhere else they are blind. So it hasn't been a priority, as you said. But I think once they know these many people have crypto in my country, well, now I should definitely take a look at how the law handles that and where I can potentially generate some tax revenue.
Yeah, but like again, I always go back to the example of Pump.Fun, which is one of the main reasons why millions of people were onboarded in the previous cycles, because they were getting in with the idea of making, life-changing gains overnight. And the reality is, I saw this from a report, that only like 0.07% of people who participated, who use Pump Fun, managed to make more than $10,000. So even if we do get, for example, numbers on how many people have used crypto for a specific year in a specific country, I do think that only a very small percentage of those people would be, prone to be properly taxed. For example, myself, who I've lost money in 95% of my trades, it would just be, adding salt to the wound. If the tax authority would come to me and say, hey, you need to pay your taxes because we know you use crypto and stuff. But yeah, I mean, I agree with both of you, and I agree with what Sergio said in terms of countries and people raising eyebrows in terms of what they're doing, especially France. I don't like France. They recently made this proposal on taxing crypto the same way that they tax yachts and NFTs. And that would mean every single transaction you potentially make could be taxed in the same way that $2 million painting would be taxed. So I agree with them. Yeah.
It's the same in Germany. In Germany, it is like that, actually. Right? So every transaction triggers a potential tax.
Yeah, but like I like the fact that Germany gives the long-term relief, and I think, if I remember correctly, on the Blockpit's German crypto tax report, it did change the user behavior in terms of how they reported, how they transacted, and everything in between. So I do like these reliefs, because it's to be honest, everything is becoming more traditional in a sense. We said that in the beginning of the episode, that even the framing of crypto now is internet capital markets, for example. It's no longer just crypto and Web3. It's becoming much more traditional, much more institutionalized. So if that's the way that they want to go, then providing these reliefs would imply that people take all the investments in a more traditional sense. So I'm fine with that. I mean,
I remember, since Trent was talking about the institutionalization, I remember a call I had with Sergio like last year, and he was telling me how crypto is literally gonna become the next. I mean, he didn't say dystopian, but that's how I understood it. Of like institutions and everything, and I was like, there's no way this is gonna happen, because we're not gonna allow it, right? We're in crypto, we're these, degen people controlling the markets, whatever. But it's happening. It's happening, and it's happening.
Well, no, I just said we should wear suits and ties from now on. It was 1st of January 2024 or 5.
We don't do that yet in this. So at least the people I know, they still wear the hoodies.
Every time I hear suits and ties, I think
the shirt is tucked in. Yeah, still, just in case.
Yeah.
No, you're raising a good point. It's not going to be a very quick transition, though, but it is becoming a little bit. I think because it's small, crypto has also a lot of experimentation built into it, and what we're seeing right now, the way I feel it's coming, is that we're gonna have something new. We don't know what to do with it. We're going to try to overly absorb it and do something and we're going to overly control it, let's say, through the systems that we put in place that we rarely see somewhere in nature. I mean, Florian greatly mentioned there that we have similar systems in financial services, but not to the extent that we kind of see with CARF. So there needs to be a very big pushback from the population at one point if that overreach is going to be felt, present, and ongoing. So it's true. We need to fight individually. So governments hear a message if there were boundaries of safety or even your own private data or any of the concerns that we have. If this tend to raise, then you need to make them public, and we're probably gonna need to all do our duty in a way to reflect on this. And governments in the end, they will have to stabilize towards a middle position whereby they don't push too hard. They get their technology together. They get they assess the risks of their overreach, and then they kind of arrive at a stable momentum. So would it change the industry? Yes, it does. It does force us to adapt into thinking in a new way.
Yeah, I think the market is somewhat rather regulate itself, right? I mean, if the country overreaches, people are leaving the country. It's easier than ever before to just become a digital nomad, go somewhere. A lot of people leave Germany, for example, right now because of economic decisions of the current administration, and ultimately that's going to hurt the country a lot. So they need to be careful in how they structure things. I think taxes are a great incentive on how structure user behavior, right? You said it with the long-term incentives, and it had an effect on how people are trading and investing, actually, and the risk management. So it can be a good thing. Obviously, taxes are needed somehow to uphold a society, but you can overdo it, right? And I think there's a lot of things to improve, not just on the tax revenue generation side, but also on the spending side of administrations. I hope we are going to learn and do better here. But overall, I'm quite optimistic, actually, that it's going to solve itself somehow based on how people just react.
Yeah, and Sergio mentioned the data. Not last year, I think 2 years ago in our country, we have like this international bank that operates throughout Europe, and I don't want to mention names, but like here in our country, that their branch, it got hacked, and all of the data from every user account and everything, it got leaked. And for me, I mean, that was shocking because I mean, we are like taught from the beginning of our lives to trust that, at least the money is safe, at least the data is safe, right? But now let's look at crypto and this whole reporting framework. It's even easier, in my opinion, to get that data and find these breaches in tax authorities, since banks focus on this security, but like tax authorities could be lacking in an aspect or two. So yeah, that's why I'm scared of transparency, right? I love blockchain because of this, but now I'm really, really scared of transparency.
I would like to add to that one thing. Like, if you're seeing crypto as money, then probably there's an important aspect there to compare it. But if you start thinking what is money and how intimate money is to a person with, I see it, this transaction, I see them very much as intimate as your healthcare transactions. And governments, rightfully so, they didn't centralize this information because that's a very, very peculiar thing to have that out in the public, right? People could get, like, if you have a disability or if you have some kind of diseases, you would be, banned out of a school or banned out of the job market. And all of a sudden we're putting into a very big pile information. We categorize them very well, or we try to, about something that is as intimate as that, with our shopping, might be our shopping or our interactions or the way we save money, right? So again, would love to see how well, countries have put guardrails there to secure and safeguard this. But just the idea that we have all of a sudden all of this together, and we're all punching a little bit at the risk that what could happen, But again, let's keep positive that they will think at it as a very simplified, level of encouraging everybody becoming more compliant. And Florian is very, very good. We've been working on helping users to become more compliant and educate them for many years. So I think there are hopes there to keep the faith.
See, that's the thing. That people raise a lot of questions and they have a lot of concerns about privacy this and privacy that, but I don't see a lot of people talking about quantum computing, for example, and the fact that how all the bank accounts and even private addresses and even blockchain is, for example, prone to be hacked in a way. So that's the concern.
Well, and AI, right?
Yeah.
I mean, quantum computing, yes, but AI even scarier, in my opinion, to be honest. Like we have no idea what's going to happen, especially on a scam side. Like things are getting so realistic. So that would be my biggest fear is like that the government agent is going to get caught by his daughter or something, where an AI scam and then handing over data or some kind of access. I think quantum computing is the complete black swan. I think the whole system breaks down if you don't manage to have quantum resistant encryption in place at that point in time, and probably crypto is going to be the last thing that's going to be affected. I think we're going to have other worries then, but that's how it always has been with society, right? It's a race. It's some new technology, and then on the other hand you have the regulation and counter technology, and so far we've always managed to have not a too big gap between what technology can do to hurt us without us being able to somehow defend against it.
But so for now, I'm safe if I just tell, for example, my tax man that a quantum computer hacked my exchange, so it wasn't me who made those transactions, so I'm not supposed to pay.
Well, as long as you don't use the money to buy a Lambo or something, where then you have to basically be able to answer the question, where did the money come from, right? As long as you don't purchase anything with the money, I think you're not gonna be on the radar. But if you're a student and suddenly you have a yacht or something, you can be quite certain that the taxman is gonna demand some answers. So if data is missing or whatever, or somebody else traded in your account, that's all fine. But ultimately, you will have to answer for where did you get the money from? And if you didn't get any money, then, well, no taxes for you.
Well, I'm very far away from getting a Lambo, so there's that.
Yeah, no Lambos for us. So, in terms of quantum computing, I wanted to add that I believe even Ethereum right now, they're working on this quantum resistant blockchain ledger, let's say. And I think that before we get this attack from something that comes from the quantum world, we're gonna have the defenses ready. And when we talk about crypto, or no, let's talk about authorities, right? Let's talk about the banks and everything. I think that they have more capital to allocate to building this quantum resistant system rather than the people who want to exploit banks using quantum technology. So yeah, that's my take on quantum computing and everything.
So to wrap up, I want to hear like one piece of advice for tax-paying citizens of the world, and what should we expect in the long term?
Get your documentation ready. Like honestly, if you didn't start yet, you should. It's getting harder and harder the longer you are in the space, and you did not tend to your documentation. But it's super easy if you take 15 minutes every quarter to just look over your transactions and see if everything is in order. So then you're prepared, right? Like if you have that, then 95% of the job is done. But that's something that you should start doing, even if you haven't realized any gains yet, even if you haven't sold yet, even if you're completely new to crypto. Get started with the documentation. It doesn't hurt. You can do that anonymously, right? You don't have to give everybody your data. There's tools out there like Blockpit, but you can also do it with an Excel file or whatever. Just start doing it. Most tools, they actually provide it for free doing your documentation, right? They don't charge you for the documentation, just for the tax reporting later on. So get to that, and you won't have a lot of headaches later.
Great, thanks for that. And Sergio, do you have something that you want to add as well?
Yeah, absolutely. I think that's spot on. You need to as a user, a great New Year's resolution, because we're in the beginning of the year, is to think and to embed a new behavior into thinking each transaction to to classify it. Your future you is gonna definitely thank you for that. It doesn't matter how you do it, as Florian is saying, is just getting each transaction that you're making. Try to put a note to it. I was doing the finances for December, and I think 3 times I was looking at what one transaction, in my bank account that I couldn't remember what it is, and that was December. And then each time I kind of stumbled on it. I had to remember till I figure out, okay, this needs to be classified. I'm going to classify all my financial transactions, and also I need to classify all my crypto transactions. So because crypto has a little bit more of a feature of independence, so you have to do a little bit more work because you want all those good things. So just thinking your auditor might hate you and might want more from you than you expect. So you better be prepared and try to build that resilience plan right now, in the beginning of the year. And I think that you will be in a much more comfortable position instead of the other way, which is trying to scrap for what happened in 2025, what happened in 2024, who I sent this, and what did I do there. This is a very, very great situation that you want to stay out of.
Perfect. Well, thank you so much, both Sergio and Florian, for joining us today. It was a very insightful discussion, and as you said, Sergio yourself, what better way to start the year, than to talk about taxes? Because that's why we're here for, right? To educate people on that front. I'm not saying that we're not gonna exploit every tax avoidance possibility there is.
There is a lot of things you can do,
but
in a legal manner.
Still, you need to be educated on this front because it is changing. The crypto world is changing. So, once again, thank you to both of you guys for finding the time to join us today.
It was a pleasure. Thank you,
guys.
Do your taxes, everybody. See you in the next episode.